To bring in Rob Luna from Luna Wealth Academy founder. All right, so Rob, I know you're in a buy and dips camp. Here's the thing, because a lot of guests come on and they say buy the dips, which is fine. Yeah. But I've seen guests who've done that for the whole year, and the implication is, our audience can't buy every dip. So two things: how big does the dip have to be before you actually pull the trigger?
Yeah, it's a great question, Charles. And I would say in terms of buying the dip, it's these big tech names that are leading that we've talked about for a long time being the future growth names that you want to be in. And I think today, you're probably going to look for a 10 to 15% decline. 2 to 3% is just normal movements. Those are the times where if you're a long-term investor, you want a dollar cost average on those 10 to 15% declines.
What about a name like Tesla? Tesla has already made a huge, significant pullback. We know the EV story has sort of deteriorated on the fundamental part of it, but they always had this sort of special place because, let's face it, if you wanted an EV, for the most part, you've been buying a Tesla.
Yeah, no, I agree. I think the problem and the challenge with Tesla, and we sold our position quite a while ago, is like you said, I think the narrative really has changed. And the future for EV, I don't think is going to be nearly as bright, especially if you get a change of administration, which I think will happen this year. So for me, Tesla at current valuations really doesn't make a lot of sense. I'm probably in the minority saying that, but I'm not really interested in the future of Tesla here over the next year.
All right, so let's talk about the future everyone's interested in. That's artificial intelligence. We're starting to get a weird backlash, right? Adobe, right? That stock is getting smoked for the most part because it doesn't have an AI strategy. In fact, its business may be hurt by AI. JBL, they reported last night, that stock's getting smoked. Here's the irony here. They mentioned AI more than 24 times on the call. So it just feels like we can no longer throw that AI dart. So how are you playing that space?
Yeah, one of the stocks that I'm looking at, I've talked about before, Charles, is UiPath. This is a company that's got an executive that came in from SAP, Google, really broadened the platform of what that company can do. The reason I'm talking about it now today is because they just reported earnings yesterday. That stock was actually up after hours about 8%, but because of that inflation data, the stock wound up being down. So you've got about a 15% pullback. The stock reported surprise profitability. That's a name I really like right here. I think you're getting a good valuation. In private markets, Charles, they're raising capital of $35 billion. It's down at around, just a third of that right now. So I think it's a good opportunity for the retail investor to take a look at.
Now, you're also saying, hey, it's also time to start pairing some of these big high beta names, big upside potential with steady eddies. And I know one you like is ChemMed.
Yeah, I really like that company a lot. Look, there's a big article that just came out the other day talking about how the shortage of plumbers in the United States is going to cost the economy about $35 billion. If you look at the biggest publicly traded company, that's ChemMed. They've got Roto-Rooter, which is about half of their business. They've also got some medical business in there. I do think with what's going on right now, they've talked about it before, there's a possibility they spin that company off. If that happens, that stock's going to skyrocket.
Unfortunately, you can never go wrong with Roto-Rooter. I know you also like Altria, but I got 30 seconds ago. What's your concern? Do you have any concern here? Listen, again, when the market has this much upward bias, when everyone is all in, there's not a lot of bears out there. They've been defeated. I start to get a little antsy.
Yeah, I think so, Charles. Look, in the short run, what moves the markets is supply and demand, fear and greed. And I think what's happened right now with this pullback is you've got a lot of people that have made a lot of money in a short period of time. So now it's the fear and greed, and what that's going to be based off of news flow. We saw that yesterday. We're going to see that next week with the Fed. So I think if the Fed is going to come out hawkish, that will send this market back probably around 10 to 12%. If there's a difference in that, I think the market can go up higher. Right now, unfortunately, it's not going to be about valuations. It's going to be about news flow. So we're going to have to pay attention to what the Fed's saying. If that turns south, the market's probably going to go a little bit lower. All
right, Rob. Hey, thanks a lot, my man. Have a great weekend. Talk to you again real soon. Although the market...